Welcome, everybody. I hope you can hear me. Can anybody give a sign from the online community if you can hear us? Perfect. Thank you very much. Welcome to the session on financing of circular economy. We started a little bit later because we are in house 6, which is a bit difficult to find. But we hope that still some of our colleagues will find their way here. So my name is Christina Poser. And I will lead you through the first part of this session. Regarding the agenda, we will start with a short introduction on financing of circular economy. And then two colleagues, Marlene and Karina, will present the Prevent Waste Alliance Circular Economy Finance Help Desk. And we will then come to the main part of the session, which is on impact investment for circular businesses. There we have an external speaker with us, Akash Singh. I'm very happy to have you here, Akash, who will tell us more about impact investing solutions for circular economy. And we will then finalize the session with the questions and answers in a short panel. I think I'm not presenting, right? You're presenting. Okay. To get to know the audience a little bit, it would be great if you could turn on your cameras. And we have prepared some questions for you to understand who's actually in the room. So,
Christina, could you come a bit under the microphone because they're saying the voice is very weak.
Can you hear me better here? Hello?
Maybe you can write in the chat if you can hear us better now.
Thank you.
Okay, great.
Okay. Then I think I wait for the questions for the answers on the questions from Alex. So the first question that we were asking is, who do you work for? So 100% of the participants work for GIZ headquarters. Nobody from the regions. That's surprising.
Answers dropping in.
Yeah, you can wait a bit for more answers to drop in.
Welcome.
Welcome.
But you don't expect really anyone from Europe, unfortunately.
Sorry?
You don't expect anyone from Eastern Europe, or is it just not there because it's not an option?
Yeah, we expect, but it's not there as an option, so you can sonst
Anyway, I've never not expected.
Because you cannot see all the answers, then you have to scroll down.
Okay, because I missed the QR code.
No, you still have the QR
You
code.
know, it was not easy. This is why we started.
We tried it from the back. Yeah.
My phone is very.
So I see there's nobody from Latin America. We were very sorry that the session is so early for Latin America, but we have some colleagues from Asia, Africa, and also external. Let's go to the next question, which was, how familiar are you with circular economy finance, circular economy only finance, or none of those? So we can see that most of you are familiar with circular economy. Some are familiar with circular economy finance. 16% at the moment familiar only with finance, and around 12% with none. Next question, please. Why are you here today? So quite a lot of colleagues say it's of direct relevance to their work. That's great. Some also say it's of pure interest. That's great as well. Finding colleagues for future exchange and challenges with finding circular financing. Thank you very much. So the room is getting fuller. That's really good. We were afraid that nobody would find the way. So thank you very much for this. And I think that we can start with a brief introduction on circular economy finance.
You can take over the presentation.
Oh,
Show your
I feel a bit strange because I've never worked with the Surface Hub, but I'm fine. Yeah.
Okay.
Okay. So I wanted to start with this very easy picture. If there are some colleagues who don't work on circular economy, showing the difference between linear economy and circular economy. So the linear economy is very easily taking raw materials, producing something from them, using it and throwing it away. And the idea of the circular economy is that you reduce the incoming raw materials because you make the products and the raw materials circulate so that they are being used more time, that you use them more efficiently, and that you have much less waste coming out of it. Okay, here we have also the ideal idea of the completely closed circular economy, but I think at the moment we are more or less in the middle. And why am I telling you this? Because this is one of the main reasons why it's so difficult to finance circular economy. Because in the linear economy, you have very high use of raw materials with high environmental costs and also high volumes of waste with all the costs that are related to it. But all of these costs are at the moment usually externalized. That means that the society pays for them and they are not included into the cost of the product, neither in the production nor in the consumption. At the same time, the circular economy tries to internalize the external costs. That means that at the moment, circular economy in many cases is not competitive. Actually, yesterday, in all the sessions I was in, everybody said this is the main problem of circular economy. It's simply not a level playing field with the linear economy. Fossil fuels are being subsidized. These solutions are not. A very easy example is this one. So you see here single-use plastics that they make around 60 to 90% of the waste in the sea, in the oceans. And of course, it's much more expensive. For example, if you think about these recups, these reusable cups, the producers have to have exactly, we have one in the room. Thank you very much.
I actually just bought that.
Now you have to buy it, you have to bring it back, it needs to be cleaned, etc. Yeah? So it's much more expensive, but this year should be more expensive actually than the reusable cups. Now, when we think about the investment areas, what are actually activities that can be financed or should be financed? And I took an overview from a study on circular investing, which I found quite interesting. So they are listing the different sectors like construction, fashion, agriculture, etc. And then you have here some different investment objectives on the upstream side, so in the production, midstream, use of the products, and downstream. For example, if you take agriculture, upstream, you have investments in indoor farming or, for example, use of insects for production of food. Midstream, you have activities on food loss prevention, for example, better storing of food, etc. And downstream, you have food waste usage. No? That can also go over to what you have here in I don't find it, but for example, waste to energy. Now, what was interesting also in the study is that they say, okay, from all the investments that go into these different sectors, which are in the first column, only 3% go to circular activities. And now I will go over to explain some more challenges which are more on the micro-meso level, no? Not this overall, okay, we have the problem of externalization of costs, but additionally, for financing these activities, we have additional challenges. First of all, there's very little awareness and knowledge among funders about these business models. So they prefer often proven linear models with a clear return on investment horizon. And there's also high costs for upfront investments in these innovative products or processes. This is especially the case for startups and also for small and medium enterprises. And here you have all the range of difficulties for financing these enterprises, as you have in other topics that we are working on. So it's not very specific for circular economy, but it's also a problem in circular economy. You have limited availability of data, especially on the impact. So we are going to talk about impact investing later, where it's really important to know what the positive impacts are. and you lack standardized definitions. In one study I read there are like 120 definitions of circular economy. So how are you going to streamline that? And of course, as in other topics, you also have a lack of a pipeline of suitable projects. Now, opportunities that exist are that as a topic of circular economy is more and more recognized on the government level as a tool to reach SDG climate and environmental objectives. That means that in more and more countries, you have circular economy strategies and policies where you can also try to create more level playing field for financing. There's a growing demand from investors for these kind of environmentally friendly investments. And there's also more awareness about the risks of linear business. So this is important for financial institutions that see, okay, there are, for example, businesses who are very dependent on certain resources, which are scarce and are getting more and more expensive. So there are, for example, risks related to this. Now, regarding the financing instruments, actually, there's a very broad range of financing instruments that can be applied. Most of them you might have heard, from grants, debt, equity, public budget instruments, de-risking, and other instruments. And most of them are the same in all the topics that we are working on. There are just some instruments that are a bit more specific. 3 of them I want to highlight. One is tariffs on the municipal level, so waste tariffs, water tariffs. There you have a big opportunity to lever also how people behave, how they behave regarding these resources. And the other one is EPR schemes. We heard yesterday, if you were in the session, about the example in Thailand, where they're working on an EPR scheme also to reduce plastic pollution. And yeah, this is the same with the reusable pack. So the idea here is that the producer pays for all the cycle of recycling, getting back the product, etc. I'm not an EPR expert, but it's an important instrument here. Then we have also plastic credits. There are some position papers on this topic, also from GIZ. I will not go into detail because it's a bit complicated topic. And then there are also trade tariffs, which are also very interesting instrument. Maybe we have some colleagues who would like to talk about it, but today we will not have time. Okay, regarding GIZ service offers, I have clustered this here in 3 areas. First of all, the work on public financing. So this is, for example, developing fiscal policy instruments, supporting public procurement or public investment, and also regulations such as EPR laws. And then below we have the strengthening of circular economy financing demand side, so working with businesses. And on the other side, working with the financial supply side, working with financial institutions, impact investors, etc. And I will briefly give you 3 examples of the work that we have already been doing. So the first one actually is an example of a plastic tax that was introduced in Morocco. It's a bit old project, but I really love this because I think we should do much more of this. So a plastic tax was introduced of 1%. And it really resulted in an increase of recycling, reduced pollution, and increased resource efficiency. And the revenues that were received through the tax were then also invested into supporting recycling SMEs in Morocco. There are some similar constructs like this, instruments like this. For example, in Costa Rica, the very well-known payment for ecosystem services mechanism, where the fuel tax is used to pay for the protection of forests, which can be a really powerful tool. Internalization of externalized costs. The second example is from Vietnam. I actually forgot to mention in the beginning that we have prepared the session together with Go Circular. And this is one of the country components of Go Circular. So they are working very strongly together with the business side, supporting existing business to include circularity into their business models. They are supporting circular startups. They have an impact investment readiness program, and also, for example, lately a publication on SME access to finance for circular economy. And finally, I'm coming to the finance supply side. It was not so easy to find many examples in GIZ. So there's one project in Brazil which is now working on this topic, and they are working directly with financial institutions to develop products for financing circular economy. Now, this was just a very broad overview. I'm happy to discuss further. I put here the names of all the colleagues who were included in the preparation of the session, but of course there are also other colleagues working on circular economy financing. Especially, I would like to mention the colleagues in the financial systems development team, but also for public finance, the colleagues in public finance. And with that, thank you very much. I will hand over to the next part of our session to Karina and Marlin. And if you have questions to me, you can ask them in the end of the session.
Okay, then we're switching over to the next part of the session. Hello, everyone. My name is Karina, and I'm from the global program Go Circular that Christina just mentioned. We're working on circular economy in Zambia, Vietnam, and Colombia. And we host an alliance as a secretariat that is called Prevent Waste Alliance. And within that Prevent Waste Alliance, we have some great finance solutions or help to get finance solutions that we want to share with you today, together with Marlin from CoP. And I hope you can see the next slide. Yes, great. Yeah, that's us. So afterwards, if you have any questions, feel free to reach out to us. Okay, so what is the Prevent Waste Alliance? It is an international think and do tank for circular economy practitioners from around the world. We have more than 600 members worldwide, and we've been launched 2019 by the BNZ. We're working on different kind of material streams, or our members do, which are plastics, e-waste and batteries, organic waste, and then we have the cross-cutting topics of digitalization, behavioral change and awareness, and finally financing the circular economy. And yeah, we also already had some pilot projects and innovation programs. So if you're interested, just visit our website or LinkedIn. We have a newsletter, or just ask us after this presentation. And yeah, this finance working group that we have, we already have more than 120 members, which is great. We have all kinds of different businesses in this working group, as well as NGOs, investors, and so on. And we do regular webinars with our members. We have done a mapping of investors, which I will get on in a minute. And yeah, we have a lot of great exchanges on financing circular economy and the finance help desk that we also talk about today. So why are we doing this? So our vision is we want to bring together our circular economy practitioners that are our members, and we want to bring them together with, let's say, the finance space, which incorporates investors and so on. And we want to bring them together, and that's what we want to do at Prevent, specifically at the Prevent Finance Help Desk. So what does it exactly entail? So last year, together with Sagana, who will hear later today, we developed a funders database of more than 450 circular economy funders from around the world that fund different sectors, different levels of investment readiness, and different kinds of companies, NGOs, and so on, which is one of a kind in the circular economy space. So it's a really great start. We also have a lot of visions that we will develop step by step, let's say. For example, we want to have an active calls for proposals database for circular economy calls, as well as potentially also some kind of advisory services from finance expert directly to our members, so like a tailored advisory service. Of course, we also have a lot of support and training material, like some training webinars we had last year that we recorded, and also some studies on finance that we did that we hope help our members. And lastly, what really our vision is to have a matchmaking between Prevent members searching for finance, and then on the other hand, funders of all kind willing to give that finance and searching for great projects and great organizations. And we want to bring them together. And we think we already had some great steps towards that. So on one hand, we want to address the supply side, which is establishing a network of circular economy investors. We want to also educate investors, because in our studies, we found that one of the biggest issues is that both sides, let's say, have some lack of communication towards each other, in the sense that investors have to be educated what are actually good circular economy projects and how do you find them and why should you invest in them. And then on the other side, of course, also organizations, let's say, speaking the language of the investors is really important. And then finally finding pipelines to actually bring them together. And then we already developed a tool, and I'll hand over to Marlin to present it to you.
Thank you, Karina. I feel I have to stand up a little bit because it's a long day, and we already tried out the camera settings, so I have to use this as well. So good to see you, and my name is Marlin Emery, and I'm very happy to keep the slides on, please, Alex. The slides, yeah. So, but this is good, then we can, get ourselves a little bit awake, because I think it was a bit difficult to find the room. I even got lost here while waiting for some colleagues to join. So we need the slides, Alex. The PowerPoint slides.
PowerPoint.
So,
and then later.
Where we were, showing quite, yeah. No problem. Then we get the blood back in our bodies a little bit here. So I'm very happy to give a short introduction and also a demonstration of this tool. As Karina was already telling you about, we have the Prevent Circular Economy Finance Navigator developed within the Prevent Finance Help Desk Hub. So this is, if we go to the next slide, I'm depending on you now, Alex.
I'm here.
So what is this? And we had a lot of discussion also after we actually started using it. The purpose for this is that it's a help. It's part of the help desk. It's a tool to support and enable the Prevent members, because it's a members only tool, who doesn't have this, what Karina was talking about, this financial knowledge, not the language. They don't really know how to approach financiers or funders. And how should they go about to make an initial investor inquiry? And it's an inquiry. It's not a demand for money. It's not something that's just given. You have to bring both the language and the questions as such so that it's understood by both parts, right? So we will demo this, me and Alex, in just a bit, but I want to, go through a bit of the steps first, and we can move to the next slide. And as I already said, it's a tool. It's based on this finance database, which Karina introduced, with 450 potential investors and funders. So what this tool does is to take all of these, because if you're looking for finance, especially if you are not one of these very, very advanced financier searcher, let's put it, then it's too much out there, and they all want different things, and I want different things. So what we do is to help them, manage this database to get a list of potential financial suppliers with a result which is tailored towards your needs, because it's a two-way side, as Karina said, and Christina as well. You need both the demand and supply to meet, and by that you can't look for everything. So It's guiding members through a list of set questions through a questionnaire. And at the end of it, we have all of these great resources, which Karina introduced as well, to help you further with this quest of yours. So next slide. So we have 6 questions, which we think narrows down this database according to the needs of the demand side. It's also important, and we discussed this in quite some intensive sessions, you need to know what you're looking for to find it or to recognize it when it's in front of you. So what we also want, so 1 or 2 of the questions are actually not for the filtering of the database. It's getting your mindset of what am I looking for? You know, that's quite important. And we have a publication, and Akash, who is also joining in the next presentation, has been contributing to this as well, but it's in 2 parts, this financing circularity. One is bridging the gap between finance demand and supply, talking a bit about those challenges and opportunities that Christina mentioned, and then it's a guidance to unlock finance for circular economy. And it's this, I think of it like a key to unlock, because you need to know what door to unlock as well as having the right key to unlock it. Right? So, and we have a bit of a disclaimer. Just because you get a results list in this finance database filtering tool, it doesn't mean that we can guarantee any successful financing acquisition, of course. Yeah. And with that, it's the next step. So this is how it looks. We have the first step, the survey, 6 questions. Then we have a database that's filtered along those answers of these surveys. And then we have a list of potential financiers. And since this is a tool for, let's say, beginners, we decided to limit the results to 10. Because honestly, it's really difficult to approach more than 10 potential financiers in the first step of a financial inquiry. So you can do the query again. So if you press the next button, no, go back, because it was a demo thing, you know. Just if you push the...
To share my screen for you.
Should I do it? Yeah, look. I'm very proud. Yeah. So you can do the query again and again and again. And then at the end, we have here the real work, because if you have the list, that's when you have to start actually taking contact, presenting your ideas, develop the finance solutions. But Kash will talk more about that. But this is then this animation arrow, which I'm so proud of. That's the tool we are talking about. Yeah. And with that, I think we can log in, and Alex will go to the Prevent Hub and show you what I'm talking about, because it's much more fun that way. Yeah? So here you have the login side, and where you get the disclaimers of what it is and what it's not. And if we scroll down here, because this you can look at later, I mean, it's a lot of information. So let's get started. And first, what kind of organization do you belong to? And here we decided to go with the private sector, Alex, right? So what do you identify with? And you see, wait, before, don't click submit yet. You see the question mark, you see the star. So if you click on the question mark, you can scroll down and you get a bit of information on what is it that we mean with these questions, in case you are unsure. And you can also, now we are already on the second question. So there you specify the growth stage. And there we have also this is described in those studies, which were on the previous slides. So if you are unsure where to orientate yourself or where you're placing yourself in this growth stage, you can see this brief explanation, and also I think you have a link in this at the bottom to the study itself. But we want to go with pre-seed. What can you scroll up and see what it says on the pre-seed? One up there. So product service is being developed. Focus is on refining the model and validating demand. So this is quite early on for our private sector, and we select growth stage pre-seed. And with that, we have already reduced a little bit. What are you looking for? What reason is your business looking for financing? And then you can select 2 options. And this is actually dependent on the growth stage you have selected before, because not all finance makes sense for all growth stage. But we always have the option not sure yet or other. And here we want to select pilot, test and prototype. And some of the suppliers are not active in all the countries in all the globe. We have here the focus region, which we think for this purpose will be Southeast Asia. And then the focus country. And that should be Thailand, because we have some activities there. You have to actually scroll down all the way. I'm not trying to be difficult, Annika.
Australia.
Thailand.
And then country of registration of organization, and there we select Germany, because that's where we live. And the reason for this, and you can click submit and directly, Alex, but the reason is that some have that you have to be located in Europe or Germany to at all apply for finance in those institutions. So here we have also the database non-financial and financial support. And we are now looking for financial support because we want to develop these prototypes. And then we submit it. And then what are you looking for? I mean, that's a very valid question, right? What kind of financial support? And this is again dependent on your growth stage. You can always choose other, but now we choose equity because we think that's quite fitting for this growth stage in this product development and the people looking for it as well.
And it's already pre-selected, right? So the answers, how you answered before, already determined what you can even choose in that question, right? So that's why they were so limited.
Exactly.
That's why there's no debt.
Exactly.
Yes. Because they wouldn't been able to, I mean, probably grant could have worked as well, but, and then we submit it. You can always get a last check-up, but
Sure.
yes. And then we submit it. And here is the results, right? And here we can download everything as a PDF on the top bottom here. So you get a list and you can save it. I think that's a very great feature, and it was made possible by Karina as well, because then you can make different searches and you save them. And then you go down and you can see, I think we can go down a little bit more. You see the level of circularity, ticket size, if it is type of instrument, we have preferred equity, stage of investment, and this is from the financing side, of course, funding method and regional focus. And then we can go down one more to see what's there. Euraseo, and further down we have investments, different one. We can click on one of the website directly, download a PDF file. And then at the end, if we scroll down, I think we have the training materials, circular capital, and if we further scroll down, we have the training materials relevant. We can scroll further down again. We have the studies we're talking about, the webinar series, and even further down at the bottom, I think we have do the test again. If you go really down, we can give us some feedback, of course, and then we can restart the survey. So do we have time for that? Or should I?
Not really.
No, not really. But it is possible to do the survey again for like an NGO. And as Karina said, this is developed within Prevent. If you want to have a demo, if you want to see it for yourself, it is limited at the moment to the Prevent members, but we are happy to provide, collegial in-house webinars if it's a focus on that. Thank you very much.
Thank you very much, Karina and Malin. And with this, we would like to hand over to Akash. Akash, can you hear us?
Yes, very well, thank you.
I can hear you as well, very well. So thank you very much for being here, and please introduce yourself. I know you have a brief update on your institution, so please go ahead.
Great, thanks a lot, Christina, Karina, Malin, for the great presentations, and thank you everyone, including the organizers for the event today, for having me here. It's a real pleasure to spend this time with you all. My name is Akash Singh. I am from Sagana. Sagana is an impact advisory organization, impact advisory based organization headquartered in Zurich, Switzerland, but active globally. And we have had the pleasure to work with some of you at GIZ for some of the projects in the past, including the circular economy financing project that Malin was just referring to. A bit about myself, and as I do that, I would like to make sure that we have the right presentation on. Alex, could you put up the...
You have the control. You could just click the next slide, and then it should be Sagana's slide.
Okay, let me try doing that. Okay, perfect. A bit about myself. So I have spent the last over a decade in the space of investments and investment advisory. Before Sagana, I was working with a consulting company called Bain & Company in the investment advisory role, advising venture capital funds, private equity funds related to their on decisions related to their investment making activities. Before that, I was with Circulate Capital, working in the investment team. Circulate Capital is a VC fund investing in growth stage companies headquartered in Singapore, but investing globally. We started with South and Southeast Asia and then expanded to Latin America, and now also have a fund which is investing into global into companies globally. Before that, I was with PwC. So in short, I've spent most of my career in the investment/investment advisory space, predominantly in the circular economy or climate-related sectors. And I'm happy to share some of my own experiences about impact investing. We will focus on circular economy, but we would also extend wherever relevant to other sustainability areas. Circular economy is a theme within impact investing, but we would like to give you a broader understanding of impact investing as well. We have roughly about 30 minutes for this. We would start with a brief introduction to Sagana, the kind of work we do. Introduction to impact investing, and then we would talk about some strategic choices that impact investors have, and eventually deep dive into the ecosystem players and some ways through which GIZ can play a role in the impact investing ecosystem. Before we dive deeper, let me try and simplify this topic. So today in this room, or in the room that you all are sitting in, and also everybody online, we are all investors. Each one of us here is an investor. Is there anybody who would disagree with that statement? So at a personal level, we are all responsible for managing our own personal wealth, whether it is in a bank account or in real estate or in let's say public equities or whatever form of investment. Whether you decide about it consciously, systematically, or whether it is influenced by somebody or whether it is influenced by just convenience, it's an investment decision that we all make for our personal wealth, and also sometimes for our families. As investors, when managing your own wealth or your family's wealth, if somebody approaches you, somebody who needs that financing with an idea, let's say your bank relationship manager calls you and says, we are launching a new product, would you be investing into it? Your approach or your mindset would be like, how much returns can I make in that? What is the risk that I will take when I invest into that, right? So those are the foundational principles that remain true regardless of the kind of investment that you want to make. And impact investing adds a specific lens of impact that we will uncover in the next few slides. And from the other perspective, for the person on the other side of the table who's making that pitch, in this case, it would be in the impact investing case, it would be an entrepreneur who is running a company. For them, they would want to fill their financing need by onboarding a person who can provide that wealth. And let me kind of come here with a personal story of mine, where I met an entrepreneur several years ago. I think must be 6 or 7 years ago, in the circular economy system. He was running a company which was taking in used bottles, PET bottles, the most common type of material that all of our water bottles are made of, or globally would be made of, the transparent plastic, rigid transparent plastic. So they would take that used bottle and they would convert that into, they would recycle that material into granules, and these granules would be then used to make fiber for use in textile applications. And this gentleman, he had an idea that he wanted to convert the bottle back into a bottle. So from a recycling language, or from in the ecosystem of recycling, this would be an example of upcycling. If a bottle can be made back into a bottle, right? Like the reason being, if it is made into textile, and textile ecosystem, recycling ecosystem is weaker, it is still not commercially viable. Though there are some innovative efforts, but by and large, if a bottle is converted into something which cannot be reproduced, or where there is a loss of quality, it is downcycling. But if you are able to make a bottle back into a bottle, it is good quality recycling, or in some cases you could call it as upcycling. So this gentleman wanted to set up a new recycling line to upcycle the used plastic bottles. And entrepreneurs are a specific, I mean, to be an entrepreneur, you have to be willing to take a lot of risk, and you have to be very, very hopeful. So he was a hopeful person. He wanted to build this and make this successful. And there is an interesting line that I get reminded of whenever we talk about hope. I don't know if this slide is, or this picture is visible especially for people towards the last rows, but I would read it out. It says, "Hope is a good thing." Is anybody able to relate with the picture or the line? It is taken from a very famous movie. Does anybody have any ideas what it might be where it might be coming from? So the movie is the Shawshank Redemption, as I'm sure some of you would definitely know. And the complete sentence is quite inspiring. It says, "Hope is a good thing, maybe the best of things, and no good thing ever dies." Right? So it's good to be hopeful as an entrepreneur. And when we go back to this person, so he wanted to build this line, but he did not have experience in that. And when he approached me as an investor, of course, there is black and white, yin and yang. There is this Benjamin Graham as well, who has written several books and inspired people like Warren Buffett. What he says about investing, you must never delude yourself into thinking that you're investing when you are speculating. So if you're making an investment decision without any basis of concrete evidence or data, it is close to speculation. And speculation is not investing. So when I talk to this entrepreneur, I ask questions like, "Have you done this before?" His response is, "No, I haven't." I ask, "Do you have production lines through which you have run samples and validated the entire process?" The answer is no again. Do you know of any customers who are willing to enter into offtake agreements with you for this product? Answer is no again. Is it even a validated concept within the country? Is it a regulated activity to have recycled products in food containers? Answer is no again. So if you apply a very, very rigid data and substantiation, a lens which requires a lot of proofs, you would suddenly see this tension between hope and the need to see strong evidence as an investor. And this tension is very important to just keep in the back of your minds, because this tension would be existing regardless of sector, theme, or type of investment you're looking at. There would always exist this tension between an entrepreneur who's hopeful and an investor who would need certain criteria to be met. In our case, in the case of the story, what happened was we looked at certain proxies. We looked at whether the entrepreneur has the experience. We spoke to some customers, tried to understand a few things in more detail, did a deeper analysis. And while there was no concrete evidence that something like this would be 100% successful, it was eventually a leap of faith that we ended up taking. We did invest into the company. And I'm happy to share with all of you that that company was indeed successful. It not just created the first food grade line in the country's India, in the plastic recycling space, but it also became the first recycling facility to get approvals from bodies like the European Food Safety Authority. So we are sitting at, this was several years ago, so now we are sitting at a handsome returns potential. From a financial perspective, it is quite a successful case. The entrepreneur obviously has been successful. He has scaled his business several times, and the ecosystem has benefited. So this was, believe me, this was the first line that we were talking about in India several years ago. And today, based on what he proved to be possible, the regulator had an example, okay, that this is acceptable. There are global standards validating this. The regulators opened up the doors to create a policy to allow food grade material to recycle material in food grade packaging places. And it inspired 10 other business people, 10 other startups, 10 other big and small companies to invest into food grade recycling lines, upcycling lines. And now there are several more running and several more in the pipeline who are waiting to commission. So eventually it benefited the investor, benefited the entrepreneur, but also benefits the overall ecosystem, which also includes our planet. And that is the guiding principle for us at Sagana, that every investment, every mobilization of resources, whether it is capital or non-capital, should benefit the wider ecosystem, should have a positive impact on people or planet. And with that guiding principle, we work with a lot of partners. So you have DFIs, we work with investors and donors, which includes development financial institutions like BII, FMO. Also work with development organizations, including of course GIZ here. We also work with family offices and corporate partners globally to help develop strategies which can create a positive impact and also implement those strategies. We are proud to be one of the few people responsible for shaping some very industry changing standards, including designing the 2X criteria for gender and diversity, designing GIN's climate adaptation and resilience framework. We have invested in a bunch of companies and more on that on the next page. And from a sector perspective, we look into climate and energy, agriculture, health and well-being, sustainable materials. And circularity is a horizontal. It's not a vertical sector that you can put in a single bucket, but it cuts across multiple sectors for us. A few numbers just demonstrating the breadth of our work here. Over $800 million of assets under advisory invested across 60 plus companies, including 17 plus funds. 100% of our investments, as I said, go into creating a positive impact for people and planet. We have invested using our investment lens, using our impact investment lens. We have advised a number of family offices, foundations, and other investors to build global portfolios across Asia, Africa, Latin America, US, Europe. Let's now spend a few minutes on impact investing. A very basic definition would be impact investing combines two different objectives. One is for-profit investment activity, and second is intended measurable positive impact. So every investment, whether you realize it or not, will have an impact. So even if you invest in an oil and gas company, it will have an impact. Whether it is desirable or not is the question. Whether it is positive or not is the question. So impact investing has to have an intended measurable positive impact objective in mind. And of course, there is a big element of having substantial attractive financial returns. To simplify that or to help you position that a little better, this spectrum should help. So on the left-hand side of this graph, of this diagram here, you have financial only investors. So your traditional banks, VC funds, private equity funds, all of those investors would sit in this on the left-hand side of this chart. On the right-hand side of this chart, you would have people like, you would have instruments like grants, philanthropies, and then non-return expecting capital, which is like completely on the right-hand side, where financial return expectation is usually zero. In between, you have had a few emerging themes come up over the last few years. So you had responsible investment as a theme emerging, where people started understanding, okay, we don't want to invest into something that is negative. So managing ESG risk was came up as an idea, and then making from risk to ESG making ESG positive bets was the sustainable impact idea. But by and large, impact investing sits between financial only and impact only. Between those two extremes, you would somewhere position impact. And over the last few years, what we have seen is a lot of impact investors moving towards the left-hand side, at least from a financial returns expectation perspective. So most impact investors today don't think of or are not motivated by just impact alone. They want to see higher financial returns. And we will talk more about that in one of the later pages to explain how that links to investors who are pushing the impact investments globally. But it's important to just highlight that there is an element of financial returns which is important for all impact investors. That is the only way to basically scale such investments. I'll keep moving on, but I would request you, if you have any question, or if there is anything which is not clear, feel free to interrupt me and ask any questions. We will have space for Q&A later on as well. But if there is something which is a problem or which is not clear at this point, it's better to have that clarified versus living with that as we continue to go deeper into impact investments. So from a scale perspective, impact investing forms less than 2% of the total global assets under management. It's a minuscule pool, minuscule size when it is compared with the global assets under management. So compared to 128 trillion, you're looking at less than 2 trillion, and even this number is likely to be overreported. There is still a lot of greenwashing that happens, as you would all be well familiar with. And within this category, investing towards circular economy is even a smaller fraction. And I think the report that Malin and Karina were referring to on circular economy financing that we worked with the Go Circular team did point out to a lot of data gaps, especially when it comes to accounting for investments that is flowing into circular economy. But regardless of those gaps, even an optimistic estimate would point towards a very small fraction of investments. Just addressing this, why for impact investing? So why are impact investors important today? So what we are seeing around us at this time is a lot of money which is coming from or which is governed by governments is unreliable. So USAID recently shut its offices. There are challenges with respect to how public money is flowing into these sustainability related topics. And on the corporate side, again, that's something which has seen highs and lows, and more recently, a lot more corporate firms are scaling back their environmental targets. So if there is a way to inspire more private investors or to inspire more investment vehicles which are led by impact investing, it can really play a big role in changing the way overall investing is happening. So in a world where both government and corporate commitments are volatile, impact investing led by private players could really be of great help. Okay, so wanted to make this a little bit bilateral and give you also some space to kind of think and apply some of the concepts that we are talking about. Let's just look at 3 cases, and it will be useful to hear from you. How would you which of these investments, which of these cases do you think would be the right cases for impact investing? So company A is a company which is making different materials, PLA, polylactic acid. For those you don't know, PLA is a non-fossil based plastic-like material which is 100% compostable in special environments. This company has done a few pilots and is looking for capital to expand the sales team and production capacity. Company B is case of an entrepreneur rather who has an idea to build a reuse model through an online platform. And company C is a company which is using agricultural and industrial waste to produce a chemical which can replace virgin materials across industries. They have received validation and need capital to approach larger customers. So the question is, which of these three companies do you think is fit for impact investing? And you can just scan this QR code or click on the link that Alex or Karina might be able to share in the chat and share your responses there. We have some responses coming in. Option A, option B, option C, or all three.
It is still only one answer. Can you renew it? It's only one answer.
Can you show me your answer, Christina? No.
Okay.
Okay, so it seems majority of you guys feel all three would be the right answer, followed by C, A, and B. Could we go back to the presentation and see what's the right answer?
It's just scrolling. Now you have to do it. You have to go
Yeah,
back.
I'll take us there. Okay. So option C is the right answer. Why option A is not correct? Because if you think about PLA, while it is non-fossil based and is not plastic, it requires specific environment to be 100% compostable. And if you think about the scale of implementation today, most countries would have environments to recycle for mechanical recycling, but to set up unique facilities for recycling, for composting special materials, that requires, again, rebuilding a lot of infrastructure. So it's not a solution. The other problem is if something requires special infrastructure for proper end of life, until you have that infrastructure, it will contaminate existing materials. So it is not a clean solution. So from a pure impact perspective, it fails. Option B, while the impact is interesting, from a commercial risk perspective, impact investing would not fit because the right financing source for such an entrepreneur should be family and friends or angel investments. At an idea stage, the risk that you are asking an equity investor or an impact investor, even if it is debt, to take is very, very high. At that level, the valuation of the company would not be able to support any kind of investment. So the right financing source for option B should be friends and family, personal wealth, or angel investors. Once that idea is validated at some level, even if it is at a very small level, which is in the case of C, where the idea is validated with small customers, it is not yet validated with large customers, but even if small customers have given positive feedback, you can then approach impact investors saying that, okay, now I have it validated it at some scale. Give me a chance to prove it at a larger scale. So bottom line is not every startup will be fit for impact investments. There needs to be a genuine impact case, a strong commercial model, and viability for the startup to scale. And the startup needs to be able to communicate all of this effectively. So with that, let's look at some metrics that we use to assess investment opportunities. On the impact side, within circularity, you would have metrics such as amount of materials which are prevented from becoming waste, amount of materials which are recycled, amount of sustainable bio-based materials which are introduced, virgin materials which are avoided. Similarly, you could have non-circularity based metrics as well. Climate, the obvious one would be GIZ impact. For social one, you could think of creation of new jobs, livelihood improvement, gender diversity, and so on. Similarly, on the right-hand side, you can see some financial and business metrics, which would be not uncommon to any kind of investment. Some of our select portfolio companies in the circularity space. So on the left-hand side, these companies are building processes, whether it is collection, sorting, recycling. On the right-hand side, these companies are building innovative materials, just using different kinds of materials to replace the problematic materials in a more sustainable way. We would not have the time to go into the details of these, but maybe in a separate conversation, I'm happy to share more about what some of these companies are doing. Let's spend a couple of minutes on the strategic choices that impact investors have. And I think the important thing to talk about here is on the right-hand side. So impact investors or impact investments can come through various ticket sizes and different sizes of the fund. They can have different risk expectations. The partnerships would be different. The type of LPs, and we'll talk more about LPs in a moment, and partnerships would be different. So depending on what are your impact objectives, you would need to build the right strategic or go design the right strategy. You can't have one solution fits all kind of an approach when it comes to impact investing. And two quick examples there. One with Circulate Capital. This the fund wanted to improve the infrastructure for waste management, including collection, sorting, and recycling. It was related to infrastructure which requires capital. If somebody wants to build infrastructure, you can't give that entity $200,000 and ask them to build that infrastructure. It doesn't work that way. You will have to support to build the first level of infrastructure successfully so that this entity can then attract more investors at scale. So in this case, the ticket sizes that we decided was in the range of $10 to $20 million per investment, and it was a larger sized fund. Whereas for another partner of ours, it is a Swiss-based foundation. They wanted to catalyze more innovation. They wanted to bring in more innovation to create a positive impact. And for such early stage investments, a ticket size of 250,000 to 500,000 would be viable to help do that pilot, to help win that first customer. So at an early level, if you see my pointer here, this is where there's a large funding gap in most LMICs globally. And if this investment could be fueled to help startups at this stage, it could just catalyze the growth of startups because there is downstream capital available. So different investment objectives, different impact objectives, you would have slightly different strategies to reach those objectives. And one kind of the second last slide that I wanted to explain to you or put before you was this one. So who are the players? Who are the ecosystem players in impact investing? Just follow my pointer and I'll explain this chart to you. So the idea of impact investing would start with an impact fund manager or a general partner, also a GP. So let's say Circulate Capital is a fund manager. So this fund manager will set up a fund, impact investment fund, and raise money into this fund through limited partners or investors. So when Circulate Capital, let's say, approaches a family office that I am setting up a fund. Would you invest into that? Then this investor is what we call as LP or limited partner. So this is player number 2, and player number 3 or ecosystem player is startups or investee companies themselves. So when the impact fund manager or impact investor raises funds from LPs, they would deploy that fund into startups. Limited partners have a limited partner ecosystem, which is 2- here. And they are governed by principles such as return expectations, government policies, institutional mandates, macro situation. Similarly, startups have a startup ecosystem in which they operate, which are driven by regulations, guidance, lower cost of capital, talent quality, partnerships. And there are also these drivers or different characteristics that drive each of these ecosystem players. For the impact fund manager, which is the entity taking decisions, they need to access institutional capital. So for them to be successful, they need to deliver high returns and raise more funds. So whenever they go to an investor to raise funds, that investor, which is the LP, would ask how much returns have you made in your previous investments. So for them, they are driven by what the investors seek. They will be bound by LP agreements on impact themes, geographies, and sometimes they may lack in-house capabilities. Let's say they may lack how to assess impact, or they may lack certain geographical nuances. In case of limited partners, they are influenced by ecosystem drivers. If it is a DFI backed by the public money of a country, they would be influenced by what is the strategy of that government, or what is the regulatory policy driving public investments. They would be influenced by what kind of benchmark returns have they set up as an institution. So for example, pension funds might set up benchmark that for alternative investments, we will not accept anything which offers below 10% returns or below 20% returns. So there would be some institutional mandates that they'll have to adhere to. There'll be certain macro level driver which would continue to change and continue to impact these investors. And in many cases, they need to see clear measurable impact, which whether good or bad, but they would want to use that in branding in many cases, in positioning themselves as investors who are creating that impact. So a clear measurable impact story is essential. And lastly, on the startups and investees, they are driven by ecosystem drivers. They need not just impact investing, but access to debt, access to grant is also important. And creating awareness about fundraising or having the right experiences on fundraising or business model, unit economics, and so on. I know this was a bit rushed, but I wanted to just leave this page here for you all to just take a look at it. It is important for each of those actors to align and work in tandem for impact investing ecosystem to thrive. Without LPs, you don't have the funds coming in. If you have the funds without a healthy startup ecosystem, you can't deploy those funds into something which generates positive returns and positive impact. And without an impact manager, a fund manager who's capable enough, you can't stitch the bridge between, or you can't build the bridge between LPs and startups. So you need all of these players to work in a healthy way for the overall ecosystem to thrive. And the question that I wanted to leave you with was, what role can GIZ play in driving the scale of impact investments across each of these ecosystem players, and what can be some relevant business cases or ideas? You can think about it now, or maybe take it as a food for thought for later discussions and brainstorming. I would go back to Karina and check whether we have the time for people to think about this question and fill in their responses. If not, it can be just shared as a food for thought.
Oh, but you can go to the next slide to share the QR code.
Okay, so since Karina says we have the time, you can use this link to just enter some of the ideas that came to your mind on how you think GIZ can unlock some of the challenges or unlock some of the opportunities that exist in the ecosystem. Karina, I don't know if this screen is visible, but if you have a dual screen, it might be helpful to just have the screen available for people to look at, if it is possible.
We don't have two screens, but I think it's fine, and I put it as a screenshot in the chat too. Okay, should we share the answers coming in? Huh. Akash, do you want to comment on it? Since you're the expert, or should I?
It seems like we are getting lots of ideas. This is meant to be a brainstorming kind of an exercise. So we don't need to necessarily immediately come to a conclusion or judge any ideas. This exercise should just lead to a pool of multiple ideas or potential business cases that could be further discussed within smaller or bigger teams. So there is, for example, I see a lot of people using the word support or business models. Would anybody like to share more on what kind of a support they have referred to, or what kind of business model support or impact-related support they have referred to?
Yeah, hi. I actually didn't write this, but I wrote a longer response, which doesn't show up, I think. We have an interesting project by GIZ that is called Catalyst, which is working on climate tech, pre-seed funding. So maybe this is an interesting example to look at, and this is a collaboration with the Green Climate Fund. So it comes with some funding. It's also working with venture capitalists directly. So I know this is not impact investing directly, but it's obviously in the chain before or upstream, so to speak, in what you're doing. And in this sense, it is feeding in projects that will be later on then invested in.
That's a great idea. And also, I think we could be helpful partners on things like these. We could support some of these companies in their fundraising requirements later on, because we could act as downstream investors for companies that come out of this program or out of the funding that is provided through this. I'll be happy to connect with you offline and then explore if there is a way for us to leverage any synergies. But thank you for sharing.
I think someone raised their hand, or did I see that wrong?
No, it was a hand raised as well too.
It was hand raised.
Is the hand still there?
Online?
Someone from online want to? No? Okay, then thank you all for your answers. Let's go back to the presentation. It's already jumping.
So we have to scroll again.
Oh no, we're there. No, we were there. Okay, next.
Yeah, I think that was the last topic that we wanted to discuss, Karina.
Thank you, Akash. Thank you for
Thank you.
Yeah, we prepared another quiz for you, just also to a bit reflect on what you learned here today. So maybe if you could scan it again, we want to, wake you up, integrate you a bit more. All the online people, click on the link to see a bit what opportunities and challenges specifically for GIZ or your project or your work arise in the sphere of circular economy financing, and maybe some of the ideas you have now are kind of feed by the stuff you learned today. So let's see if there are some answers we can be maybe a bit inspired about, or we maybe face the same challenges. see. Don't have to be super long sentences, just like what comes to mind. Okay, let's see what answers are coming in. Yeah, I think there are already some great ideas. A bit also what our session actually was about, or what one of the objectives was, which is, for example, sharing tools or sharing ideas by GIZ, because we really feel like there's so many great projects already doing work that is interesting for other GIZ projects or that they can build up upon, but maybe we don't know those projects or those global programs exist. And that do such things that could be so relevant to our work or to a new project we're building. So we're trying also to find a bit of a finance circular economy group here in the session, where maybe even later on we could stay a bit in contact if we have questions, if we want to share tools or ideas, for future opportunities, because we think that GIZ has a lot of potential for great synergies, but sometimes in the daily work we kind of don't know everything that is going on within such a big organization. I see a raised hand. Yes, please.
Hi, my name is Stephanie Bauer. I am in the Competence Center Financial Systems Development, and I've also worked partly on circular business model, circular finance in a previous role at IntelliCap. You may know maybe Sagana. My question is, what role do you see corporate venturing is playing in financing circular business models? Because that was something we had also identified as an opportunity, and this could also be something, of course, where we as GIZ can play now more a role. We have now this increased focus also on private sector cooperation, I mean large corporates, and bringing them into our work. So we have seen in the previous work that some of the large corporates are also interested in new circular business models and that they can then also act as an investor, especially because, as you have shown, there's so many gaps in financing, and they have maybe sometimes some other pots of money through which they can get engaged in financing startups, which can become an interesting partner for them then. I mean, I know it in the circular textile space, but I don't know if in other sectors as well.
Thank you so much, Akash. You want to jump on it?
Sure. That's a great question, and also an idea, I guess, embedded into the question, and very much support that idea. Basically, we, through personal experience, I can also share, we have seen interest from a bunch of corporate firms to evaluate startups which can not just drive sustainability, but importantly from a startup's perspective, from a corporate firm's perspective, integrate into their existing supply chains. So the challenge that corporate firms have is they have a very different style of working when you compare them to a startup. They do not have as much networks on the ground through which they can tap into the startup ecosystem. They do not have existing capabilities to evaluate these startups, not just capabilities, but also sometimes patience to evaluate these startups. And most startups, if you meet them, they would not check all the boxes in the first meeting. You would need to handhold them for some time so that they are able to bring their products or services to a level where it fits with the corporate firm's needs. So basically, there are gaps between a corporate firm wanting to do better things and a startup wanting to serve the needs of corporate firms, and both of them need each other. For a startup, if they get integrated into the supply chain of a large corporate, that's a very, very huge scale opportunity. Because most of these companies are global. One startup serving to one corporate firm itself can be a big scale opportunity. For corporate firms, they need innovation, and they can drive a lot of innovation internally, but they'll hit a ceiling. They can tap into the innovation which is happening globally, driven by so many startups. So that partnership is very natural, but you have to build, or you have to connect, you have to act as a bridge between the corporate side and the startup side. And I think that's a key role that somebody like GIZ can play. Those are talking at different languages. You need to have somebody in between to just facilitate that, because then the synergies can be really attractive. And to your other point on sectors, I think it's applicable to it's a cross sector thing. Like we have seen that work in FMCG space, in the green chemical space, in the packaging space. You talked about textile, where you already have a lot of people trying to do this. So I think it has applications across sectors. And not to forget, many corporate firms have access to large pools of capital. For them to just spend some money on a pilot is relatively easy if they see the longer term value in it.
Great, thank you, Akash. I hope that answered your question, Stephanie. I think then you already involuntarily introduced the Q&A part of the session. So yeah, we wanted to leave some time for that, the online folks as well as here on site. Yeah, you have an impact investor, but you can of course also ask questions to Christina, Marlin, me, or yeah, anyone that spoke here today. Also Christopher, also part of my team, also works on a lot of financing projects, including this one. So yeah, we're really happy about any questions. Yes, please.
Yeah, hi, my name is Daniel Taras and I'm based in Argentina right now. I have a question to Akash, and I'm interested in the dynamics of the industry right now. I mean, I think for 1 or 2 years now, there's a lot of backlash against ESG investing generally, and I'm curious to know whether there's also a decrease in demand you see for impact investing as a result, because obviously it is more complicated, because as you've shown, it's a subset of normal investing, but with higher demands ultimately. It's curious to see that. And the second question, somewhat related to it, my assumption is that in the past, there was such a high demand for impact investing because it was very, very popular, or maybe still is. And if there are so many investors chasing so many deals, normally the return goes down. And so I'm curious to see, to hear whether this is correct, whether the return expectations for impact investing are actually lower than for normal investments, simply because there are more investors chasing fewer deals. Thank you.
That's a very, very nice question, and I do appreciate the perspectives that you're adding to it. And it's controversial as well, so it's even more interesting. So based on our own experience, again, impact investing, when it started, there were some geographies, particularly regions within Europe, which were more open to the idea. A lot of family offices had this intent or had this vision of creating a world which they want to leave, and they were more open to that idea. Gradually, what happened was, especially when this idea started spreading and you look at other geographies, this was less and less the case as you moved away from this concept. Initially people thought that impact investing is concessionary investing, like the returns expectation of impact investors are lower. And that mindset created a problem for LPs, or let's say if you talk to a family office, let's say in Asia, sitting in Singapore, for example, and if you talk to them about impact investing, they would have a slight negative connotation about it. They would by default assume that you're asking to compromise on financial returns. So, and which is why we believe that impact investing will not be able to thrive if you attach a compromise on financial returns. For impact investing to thrive, it has to match the financial returns that are offered by similar investors in the market. Only then you'll be able to attract more investors. And unless you have capital flowing into impact investors, you will not be able to deploy that to the startups. What that means is there is a very strong implication of this for startups. You will need to have startups which can generate those high levels of returns, because only then it becomes a compelling story for somebody who eventually wants to prioritize financial returns. If you ask for people to compromise on that, only a very, very small fraction of the investor population would sign up for something like that. But to have this scale, you will need to have more investors signing up. And to the other point that you talked about, where if more investors join impact investing, the returns expectation should come down. I would say it's the other way around, because the gap that you see, whether it is on the climate side or circularity side, those are interrelated, but anything on the positive impact element that you want to create, the financing gap is huge. So from a demand and supply dynamic, it is still overly tilted on the demand side. The demand is significantly more than the supply which is available. So I would not say that we are even near a point where more investors would make it would lower the returns expectation for the companies.
Yeah, thank you. And if you dare to invest in Argentina, let me know.
Yeah, would love to. We are active in Latin America. Happy to kind of explore any synergies there.
Yeah, please go ahead.
Akash, just to pick up on what you were just discussing, what are your thoughts on raising project finance rather than raising long-term equity for SMEs? I mean, is that a pathway towards attracting more investors?
Yeah, I didn't get the last few words. I understand that you're talking about project financing, but if you could just come again with the last few words.
If that's another pathway to closing that gap in supply and demand.
Yeah. So project financing is definitely one of the critical parts within financing that needs to be there for the overall community to develop. But project financing cannot replace or will not be able to substitute what the gap that impact investing fills. Reason being, most project financing investors or financiers need stable cash flows for the returns expectations to come lower. They need stability in cash flows, and to reach a position where a company can talk about stable cash flows or stable returns to project financing companies, it needs to have proven that at least a couple of times, if not more, already. So we have a few companies in our portfolio who are trying to raise project finance based capital, and most of their earlier conversations are focused on these financiers asking for proof of concept. Where have you proven this? And it's a simplified version. When I say where have you proven this, a lot of times investors become sophisticated and say, I want this to be already running at the same scale, because they want this to be addressed at that level, that I need to have existing examples which demonstrate the track record for me. If you go back to the initial slides where we talked about hope versus concrete data, right? So project financing, you'll still find a lot of investors, financiers sticking to that, show me that track record. And I would also go ahead and mention that we have seen some DFIs as well asking those difficult questions. Like we have seen startups struggling in those conversations with DFIs when DFIs ask, can you demonstrate this and then come to us? So that demonstration part is where sometimes value of death occurs, and you need impact investors to and similar other investors to come in and fill that gap.
Thank you, Akash.
But once that is, just one line. Once that is proven, the scale up should be enabled by project financing investors. They should help scale the infrastructure later on. Yeah, sorry, Karim, we can go back to any other questions.
Any other questions? Please go ahead.
My name is Miloš I'm coming from the company Max Energy and Water.
I think it's a bit difficult. Can you speak up?
Microphones hang up there, so
I will try louder. My name is Miloš I'm coming from the company Max Energy and Water. We are technical advisors. The tool that you presented was very interesting. And just one question. So the outcome would be the list of the potential financiers.
Now, the outcome would be limited to 10. If it's longer than 10, you would need to retake the survey because at this stage we think that 10 is the amount that the user of the tool would start off with. But there will be another feature for the whole database where more advanced users or acquirers of finance can filter to their needs. But this is a full stepwise, and I guiding the user towards this list. Yes.
Yes, and I was interested if you can explain us a little bit or tell us how these potential financiers are selected, and maybe this list can be expanded with some new funds or something like that. So what was the, let's say, the criteria for selecting and for filling up this the list?
So actually the 6 questions we had, which I worked through with Alex, is the filter function. So we have a filter function which is applied from the web provider on our database, which is filtering according to those. And then out of 450, we look at who has equity in this region, in this specific. You sometimes have limitations where the organization applying for finance is located, and that's also included. So these are the filter options. I think we actually have some hidden slides, Alex, on those, but
I just want to know if I understood the question right. Do you want to ask how we found the 450 funders that are in the database? Okay, then maybe Chris can.
Yeah.
To be on the list.
Yeah.
To get on the list.
Yeah.
Okay, well, that's the tricky one.
I mean, of course, if you look in the internet, you will find a lot of, let's say, entries, right? But we really had to look into each case to see are they suitable for our database or not? Because we wanted to really have, let's say, a higher granularity on circular economy. Because circular economy is a theme in different funding databases, but we wanted to go a bit deeper to look at who's investing in upstream, downstream, midstream, in reuse, in bioeconomy, and so on, right? So we really had to look at each fund. We used mostly data which were available on websites, online, right? Data those companies provide. Then we also looked at, let's say, registries for deals to look at what these companies actually are funding, right? Because most of the deals do not have the label circular economy on it. It might be a deal in the solar industry or somewhere in the agriculture industry, right? But we had to, let's say, put our own circular economy lens on it and see, does this also fit our definition of circular economy? So it was a bit of a tricky work. We are currently working on converting the work Akash and his team has done manually by an AI tool, right? To really do this work also separately, because now it's 450 entries, but then a lot of companies change their investment philosophy, change their products, right? So it gets outdated pretty quickly. Yeah? Not only for the venture capitalists, but especially for grants, right? They close every couple of months, they're closed, and then you have to look again at it. So really to increase the relevance of this database and keep it updated, we're working on, let's say, a supporting solution to that.
It is very hardcore desk research.
I see now.
Yeah, it's a lot of work, right?
But of course,
Thank you very much. I think we have to move on a little bit. There's still another question here.
Yeah, I also had a question on the finance navigator, because you suggested when we went through to select, we are registered in Germany, because you said otherwise maybe it won't get results, if I understand right. So that was a bit the question for me. Are there a sufficient number of investors or finance providers also in the database to cover local companies from our partner countries?
Yes, I mean, this is the basic first part. What are you looking for? Where are you located? So if you are located in Germany, because we had that situation with Thailand actually, where there was a NGO wanting to help or start up something in Thailand, but they were registered as an organization with headquarters in UK, I think it was. And they were not, you could not apply for money on the third base, not for somebody else, but where is your organization registered? That limits where you can apply for funding. So the question is not whether the database is sufficient, because I do think it's very diligent work. It's if it's out there at all. And that is what we are helping you find out with this tool. So if you are a UK-based or a German-based organization looking for financing a project in Thailand, you might not be able to approach financiers who require that you are registered in Asia. And we are sorting them out, so you don't need to bother talking to them in the first place. So I think the question is, what are your own limitations on financing? Availability approach. So I think, yes, there is, I would say the database is very, I think, the one of the best for this purpose, what we are having. And if you don't find it there, maybe it isn't there.
Yes, but to answer your question a bit more, yes, we found that if you select that you're registered, let's say in Europe, that there are usually more results than, let's say, you're registered in a really smaller third world country, but there are still results, just fewer. And I think that's just a problem that shows how the world works, rather than that our database was only, specifically looking for European funders. But it's actually a function that you will not find in a lot of databases. That is really detailed work from our side, that you don't have to look through all these websites and all these funders and then find out it's actually, I think a good.
May I say just one second? Even if because the second part would have been Ghana with a registered NGO in Ghana. And if you get one hit, I mean, that's quite good, because then according to the demands you have, you get a better match. And it's better to have one matching, or, where you are eligible for funding, than to have 10 where you don't know if you are eligible for funding, So you are reducing the work, because I think the slide.
Thank you very much. I think there are quite a lot of questions still on the tool, but we have one question here in the chat. Rajin.
Andy, I think you're raising one. Yeah.
Yes, hi, thank you. My name is Ranjan. I'm working on a GIZ global program that is supporting green bond issuances in many countries. And I wanted to ask, like in your studies, so maybe a question to the colleagues from Go Circular and Christina, if you encountered also like interest in countries and by companies that are looking more towards local capital markets for financing and may just need a bit support to go to the next step and tap into these capital markets, like for example by issuing a green bond.
I can take this question. This really depended. I mean, we talked to a lot of companies, and their needs and demands, also their willingness to approach different investors, really changed from the local context. So yes, we also approached or came across companies which were really turning more to the local markets and were quite open for solutions, right? But then, of course, there were also companies which were looking for international funding and so on. So I think there was a variety of different cases.
Yeah, from my point of view, I would say I haven't dealt with such big companies. And of course, the smaller ones, they have their local house bank and finance themselves through their house banks. So if they're credit worthy, they usually don't have big problems. But maybe there are other colleagues in the online room, maybe Stephanie, Mira, please go ahead.
Well, can you see and hear me?
Yes.
Hello, everybody. Actually, we were discussing some interesting cases in Vietnam where usually there are some businesses where indeed a loan would be more interesting for them, because loans can be easily had, but usually the collateral is an issue. So if there is then options for them to maybe even get funding from an impact fund that they can use as a collateral and kind of change it to then with that get a bigger loan for further investments, that is something that could be quite interesting.
Thank you, Mira.
So yeah, it really like there is different things and not necessarily it's always impact investment that is the most attractive to many of the businesses.
Okay, I think we can slowly come to an end of the session. Been a long session, and we had the plan to have a very short statement of all of us who organized the session. So I would like to invite Karina, Christopher, Marlin, and Akash to, in one sentence, summarize what they think is really important for circular economy financing for GIZ. So, Christopher, would you like to start?
Sure. So I think where we can really have an impact is strengthening the ecosystem for circular economy business cases in our partner countries, but also support innovations through piloting, through financing. And we have the possibility through financing to also de-risk further investments.
Thank you. Karina.
Yes. A bit what I already said before, I think we should use our synergies within GIZ as much as we can, learn from past projects, failures, but also great successes, because we don't have to invent everything from scratch. Maybe we can already build upon something that has already been great. So I think, we should exchange a lot more. I think we can learn from each other a lot.
So I like to echo a little bit what Karina said. I think we can learn a lot from what's already here. I think this whole week of CoP shows the experiences, the readiness and the ambitions of the college to really work on this. And I think together with our partners, we could maybe go towards filling this bubble with impact investing and circular investment instead of being this what Akash showed, micro bubble. We have room to grow. I think that's positive.
Thank you, Marlin. Akash.
Thanks. I would build on to what Christopher said. It's important to strengthen the ecosystem. And I would add that different players in the ecosystem would have specific nuances, specific motivations, and opportunities and challenges. It's important to uncover those and figure out the areas of which can create the biggest unlocks and how we can unlock those specific areas.
Thank you so much. From my side, I think I would say, I like the view of the bubble. Let's create a big bubble. Let's also take in the public finance colleagues because internalization of externalized costs is so important for this topic. And let's keep on building partnerships with colleagues like Akash and Sagana. That's extremely helpful. I very much enjoyed your presentation, and I think the question on the 3 companies was also an eye-opener for me. I think we need to understand better who really is asking for financing and how as GIZ we can support here. So I think that was very helpful. Thank you so much. Thank you to all the participants. And with that, I close the session. Thank you.
Thank you.
Akash, speak to you later.
Thanks, Akash.
Thank you all.
Bye.
Bye-bye.